Trading Ideas in. But for the time being, let's stick to earnings. And we just saw numbers from Bharat Forge come out a while back. Well, you can argue that the revenue is more or less in line, but the profitability was a little below street estimates, which is why overall it's seen as a bit of a subdued quarter for Bharat Forge. To discuss the outlook for the company, we have Baba Kalyani, Chairman and Managing Director of Bharat Forge, with us on the line now. Thanks very much, Mr. Kalyani, for joining in. So you've done about 21% growth in revenue in the year that closed out, and we were reading some of the commentary as well, and you indicated that it'll be a good year. Most businesses will do well, and even the exports business, which has been the pain point of FY23, you're saying it'll revive. Can you give some more color? What segments specifically will drive growth for Bharat Forge in FY24, and can you better the 20-odd% that you did in the last year?
Yeah, well, thanks for having us on your call. First of all, we now have almost 5 business segments that we have made in our company. Our main business segment, which is automotive components, which is Indian operations, is doing extremely well and will continue to do well. Our defense business has picked up hugely, and we see a huge growth in FY24 in that business. Then we have our industrial business, where we have acquired some new capacities in castings in the south. That is growing at a very fast pace and is EPS accretive right now. And our overseas business, which has been a drag on the last quarter, I think will turn around, and we should see in FY24 our consolidated EBITDA margins to be somewhere in the region of 17, 18, 19%, something like that. So I think we are looking at a very strong year going forward. We look at high double-digit growth in our business, and we look at almost all our businesses moving towards profitability.
Right, Mr. Kalyani, good afternoon. You're saying margins FY24 on a consolidated basis between 17 to 19%, somewhere there, right?
Yes, almost 500 basis points above what you saw in Q4.
Okay. And on the top line, would you want to put out a similar range? A high double digit?
Top line also will grow in high double digits, maybe closer to 20-odd%. Or maybe a little more, maybe a little lucky.
So 20% top-line growth and a 500 basis points improvement in margin. Sir, your long-term debt has gone up on a year-on-year basis. You're ending the year with a debt of nearly 2,500 crore rupees, and your debt to EBITDA has also crossed the 1 mark, 1.01. Do you expect debt to increase further? And what's the debt to equity ratio that you're comfortable with?
No, first of all, our debt hasn't gone up. We have more than 3,200 crore cash on our balance sheet right now.
Okay.
So we are pretty comfortable with debt.
Okay, all right. Hi, Mr. Kalyani. Yeah, go ahead, sir.
Yeah. And we don't have a large capex plan for this year, for FY24. So we are quite okay, and I think we will generate a lot of free cash flow this year too. And the debt will come down. In the next 2 years, a large part of our debt will disappear.
Interesting. Hi, Mr. Kalyani. Always good speaking to you, sir. This is Nigel on this side. You know, besides your own business, the street likes to hear from you as well. Not only with regard to Bharat Forge, but if you're sitting on some cash and you believe that you're fairly comfortable, how interested are you in BEML? Now, the land assets. No, Mr. Kalyani, I need to ask you this because,
Just like you analyze my balance sheet and my numbers, please do the same there and give me your opinion.
No, but I'm not going to be the one that's bidding, Mr. Kalyani. So I want to know if there is any movement, because in the past, I think you all have hinted, yes, we are interested. That land assets...
We have been interested. We are still talking to the bankers, but, there are a lot of issues that need to get resolved before we can take serious interest in that. And
but couple of things...
At this point in time, there are multiple opportunities for us to grow. We are looking at growth. We want to grow our business at a very fast pace.
Right,
And
but
go ahead.
yeah, so sir, so you're interested in the asset, but there are a couple of things that need to get cleared out. Now, one of the things was the land assets that's moved out. What else are you all waiting for? I mean, the assets become a little bit cleaner than what it was, but is there a debate on the valuations?
No, I mean, valuation is one problem. Manpower is another problem. Okay, there are multiple product lines, some of which we have no interest in. The third problem. So, there are multiple issues involved.
We say that the intensity of interest is waning because obviously it's difficult for you to remain interested at that same level unless issues get resolved,
Exactly.
right?
Exactly.
So, Mr. Kalyani, if not BEML, this is hypothetical, obviously, but you mentioned you have a fair amount of cash on the books. The business is going to throw up more cash this year. Then, if not BEML, something else? Have you identified other potential candidates?
In last year, we just acquired 3 casting companies in the south, and we are growing them. And you will see the numbers as they come out. We will see a very, very high growth in that business. So our industrial business is going to start growing, and that's another area for us to diversify from automotive going into industrial products.
And just a quick final question in terms of diversification away from automotive, as a percentage of your revenue, how much do you see defense contributing in FY24 and let's say next year as well, FY25?
FY24, defense will contribute 10% of revenue. In FY23, it was hardly some 2% or 3%. So it is increasing to 10%. And I think if you go forward, FY26, it will be more than 20%. But our revenues will also grow quite substantially by that time.
Mr. Kalyani, you've given us a lot to chew upon. Thank you very much for joining in. That is Bharat Forge guiding for defense contribution to pick up significantly. Currently, it contributes in low single digits, will improve to 10% in FY24 and further to 20% plus 20-25% by FY26. Confident about margins improving by 500 basis points to 17-18% on a consolidated basis, a top-line growth of 20%. BEML, not very sure. There are concerns on manpower, valuations, parts of the business that they're not very interested in. But they've just completed 3 acquisitions. Their focus continues to remain squarely on growth. Let's see whether they snap anything else up this year. So that's Bharat Forge for you. The stock is a bit subdued in trade, down 1%, because margins this time at least have come in lower than street expectations. But let's get into a break on that note. On the other side, we'll be joined by Sriram Velayuddhan of IIFL Securities to discuss the MSCI announcement on the HDFC Twins and what it means for the stock from here on.